Hello, hello, hello. Mic test, mic test, mic test. Looks like the audio is working. Hello, guys, and welcome to the 142nd edition of the Trading Opportunities webinar. And this is your host, Nirav. Before going any further with the webinar, let me give you a very quick introduction about this webinar series, how we will proceed, and a little bit about my work. So, first of all, this is a weekly series called Trading Opportunities. We discuss major global markets, including crude oil, gold, S&P 500, Nifty 50, Euro USD, and sometimes even Bitcoin on and off. And currently we are doing them at 4:30 p.m. GMT, 10 p.m. IST. So convert it to your time zone, whichever time zone you are in. In the past 140 webinars, we have in total caught 356 trades. What happened with the last discussion, we will check out in today's discussion. Of course, the way we will proceed is by going over the charts of Euro USD, crude, gold, S&P, Nifty, and probably even discuss Bitcoin. And every time we go over these charts, we will first look at what was the discussion in the last webinar, right? Yes. So before I continue further with the actual content, do let me know, guys, if my audio is working fine at your end and the video feed is working. I have checked at my end. Yes, it is working again. So two confirmations would be better. One my end is working. One from many of you guys will be nice. Uh, R Singli, Raghu, and Ativat are here. So one of you can confirm. Anyways, going forward with the introduction, I am also the author of the book Think with the Markets, available on Amazon's Kindle edition as an electronic, what do you call, one-click delivery. If you are interested in understanding the beginner to, sorry, intermediate to advanced concepts, you can have a look at into the book. If you are a complete beginner, I suggest the video called a course called Complete Guide to Professional Trading. It's available on via my website. Just click on the link in the middle, Elliott Wave course for beginner to intermediate traders, of course. And lastly, here's the forecast accuracy, which we show off every time before we begin the webinar. Since 2016, as the forecasts have been produced since then, we have had an accuracy of 80% plus every single year consecutively for 6 years. These were all mostly monthly webinars, which I used to conduct back then. And in between video updates, you can check the name of the instrument, the date of discussion, and the analysis, etc., etc. After 2021, I started doing this weekly webinar series, for which I was just telling to tell you we had 356 trades caught in the last 140 webinars. So that's about it for my introduction, my work, and my industry beating accuracy, etc., etc. And yes, lastly, we do have a slide, a private Slack group. If you are interested in checking my updates, you can send the request by visiting this link and clicking here, by filling the form, etc., etc. You get the point. So now coming to the actual content. First of all, let's check the chart of euro from our last webinar before we proceed with our current discussion. Everything is time stamped in these webinars, so euro must be somewhere here. Okay, so here is our discussion from last webinar. Let's see what was being discussed before we go to the actual chart of euro. We were expecting further downside movement. If I zoom into this chart, we were expecting some possible correction. The price was 1.05539. We were expecting slight upward movement before a leg down would be seen, and it literally happened like that. The market did go a little bit up, and then there was a sharp fall. We will look at it now on the actual chart of euro. And here is the actual chart of euro. The last discussion, as we did, was on last Friday, 15th November. The price was somewhere here. The idea was that the market will One second. 15th November, right? So I guess the price was somewhere here. The idea was that the market will give one more leg, taking out this high. It did take out this high, and then there will be a fall. That was literally the analysis. So it played out picture perfectly. Those of you who were with me in the last webinar and were able to catch this analysis live, and as a matter of fact, if you were able to catch the trade live, that will be nice of you to share it with the live audience who might be joining us for the first time, second time, or who knows which time. Right. So that was the trade of euro, discussed, played out literally as it is. And yeah, I forgot to check out the comments. One second here. Hello, namaste, R. Singli, and good evening to you, Raghu, and good evening to you, Hetivat, members of our private Slack group, Raghu and Hetivat, and thank you for the confirmations there. Yes, good morning to you, Luis, joining us from US. So, what were we discussing? We were discussing the chart of Euro USD. Let me just run the text. Right. So, we were discussing the chart of Euro, how it has followed our analysis so far. And now let's have a look at what it is really doing as of now. So, I'm at this point in time assuming that we are seeing an impulse from the point of reference around the date of 25th of September 2024, price level roughly speaking around 1.12116. This basically is the last point from which I will be discussing the analysis. Of course, there are multiple points of references. We'll keep switching them. If you want to know more about how I use these things and all, again, as I suggested, you can go through my video course, and there is a free 13 video series without registration. You can check that out by visiting the link in the description, scrolling right below the screens, or you can also just click on the link in the YouTube video description. If you're watching this on YouTube, if on LinkedIn, in the LinkedIn description. So from the point of reference, as I've mentioned, we are expecting an impulse in the downward direction, and impulse in Elliott Wave terminologies is a five-way progression. We are expecting that we are currently possibly in the fourth wave here. So we have, that means, already completed three legs here. Once this fourth wave is complete, we will expect one more leg down, which can take this market lower than whatever this level is, 1.03298. Interesting fact is this market gave a very sharp fall, but as you can see, it respected the expected target level, which is the channel support, and you can see extremely clear buying activity coming in. So that means somebody was keeping an eye on this channel, and this is an Elliott Wave channel. So that means that somebody was also, you get the point. So anyways, coming back to our discussion, actually this is also a normal channel. In some cases, Elliott Wave channels are completely distinctive from normal channels in some aspects. In this case, it is not really the case. So anyways, coming to the analysis, what I'm suggesting is that possibly this market will give a pullback for wave 4 to 23.6 or 38.2 retracement level. I have just refreshed the page. So yes, so here it is. Let's mark these levels. So we are expecting a pullback 1.04745, and another target will be 1.05631. So these are the two levels where this market can go up till and take resistance. I will say that the first level is more important than the second one, 1.056. Now we can delete this. Now, what we want to see is a three-wave movement in the other direction, because in Elliott Wave technologies, wave fours are corrective waves, and corrective waves are in a series of three waves, could be zigzag, flat, triangles, complex, but all of them have one thing in common. They are all three-wave progressions. So in the most basic sense, I have drawn a zigzag. Of course, it's just representative that there is a correction incoming. It does not really tell you what the structure will be. So first level of resistance is this, and we will like to keep an alert here. And when the market approaches level, we'll like to analyze the price action and the counts. Of course, I'll be analyzing it beforehand as well, but this is going to serve us as a last resort in case we miss the move or something. right? So strategy remains very simple. We wait for the market to show its hand. Important levels we have marked, and once we see some sort of activity in our favor, bearish side, a sign of weakness, reversal sign, reversal pattern, break of channel to the downside, yada yada yada, 100 different things are possible. But the point is, once we see some sort of weakness here, then we will look for this leg, right? And simpler strategy will be to just wait for this correction, and if it really is a zigzag, then we can just wait for the break of this B wave of the zigzag, this down leg, whatever this low is. So on the actual chart, if the market really does follow this red arrow, then we wait for this downward level to be broken. That's a very simpler setup. There are more aggressive ones. This is a little bit conservative, but all right kind of setup. And that's about it for our discussion on the chart of euro. If you guys have any doubts or questions, you can just let me know in the live chat, of course. And yes, here are some trades we pulled on euro. All were posted live in our private Slack group. Let's see. Picture perfect so far. Let's see where's the entry. Current progression in ED looks to be moving in wave C, zigzag, scalp shorts consideration below 1.053T. Added minor shorts here. So I added shorts on 28th November. The price was, by the way, in live analysis, I was able to figure out, I did figure out the actual reversal, and we were able to spot this exact diagonal in live market. As you can see, I entered shorts at 1.05925, which is right once this diagonal got completed at whatever this level is. So 1.05925, somewhere around here, we entered shorts, and following the market, book profits on all shorts, considering possibility of A4 or whatever. Let's see, 1.05479. So I was considering the possibility of B continuation, sorry, 4 continuation, double bracket degree. It's a complex count. It didn't play through, and it's relegated at this point. So not much point discussing it. 1.05479. So you can yourself see the movement we captured is here to here. That's a pretty good move as per my own understanding of this market. Right. So trades like these and analysis updates, etc., we all post them in our live Slack group. Of course, I do not recommend anyone joining in who does not know Elliott Wave basics. At least basics are required, because without basics, what will you understand from these posts, anyways? Right. That's about it for our quick take on euro. I think I've given enough time. There is no question, doubts here. And do let me know. I am going with a little bit higher pace than usual here. So let me know if there is a need to slow down. If not, I'll just continue on. Let's see if my stop is it. My stop was at 2682, I believe. So I think I will have to check. 1 second. So before we move over to the chart of crude oil, I'm just gonna check my running position on gold. We have a long in play. Let's see if it held the stop. It held the stop. Yep. 2682 was the stop, and we are seeing reversal around 84. Nice. So let's head over to our chart of CL crude oil. See what was being discussed in our last webinar before continuing over with the current discussion. So here is the recording from our last webinar conducted on 15th of this month. And let's see what was being said on the chart of crude oil. So crude oil chart, we were discussing higher time frame. I think daily is what we were discussing. Yes, so this was the main theme, that we are seeing some sideways congestion. Once this congestion is over, we will look for a downward movement. So market can propagate within this yellow box, yellow zone. And that basically means it can go from these 70-ish levels, 67-ish levels to 80 plus levels before falling. Based on this analysis, I have entered some small swing positions. Currently, they are not doing very well, but let's see what was the basis of it. So the basis of it analysis of this analysis is literally what we discussed in the last webinar. I am assuming either this B is complete and we will see C soon enough. If not, the possibility of B continuing means that this market can go within this box range. So that's the reason it's a swing trade and a small position size, because if it is propagating within this box range, I will have to possibly add some more shorts here near the upper end of this range, and that means substantial losses will be visible on the position by that time, even though the size is small. So considering that the position size has been kept small and the idea remains either straight down or correction or movement within this box and then down, that is the main theme for crude oil. There is nothing really to add here. It is kind of very high time frame analysis. I generally don't take that high time frame trades very often, but here is one I've taken, and there really isn't much to analyze or discuss here. So that being said, I'll just move over to the next chart of gold. Unless, of course, you guys have any doubts or questions, you can just let me know very quickly in the live chat. And in the meantime, I'll just go take a sip of water. Is the feed going live? I'm not seeing any live comments. Are you guys asleep or what? I can see there are a good amount of people online. Well, without wasting any further time, let's head over to our chart of gold. Here's the discussion. Where is the discussion? Just trying to figure out the exact point. Yes, so there's a discussion for gold last webinar. Let's see the exact things we discussed. Well, thank you for the confirmation there, Raghu. So yes, as I was saying in the last webinar, we discussed corrective movement in gold. We were able to figure out the wave Y and the idea was very simple, that either the market will give one leg up and then fall, or it will continue going up. So we were actually able to, we were actually, what do you call, counter trend bullish, because short term bullish, I would say, because the idea was that one more down leg can still be remaining, or the idea of the down leg was not completely relegated. And as it comes out, I was able to capture this leg which has played out. You will see on the live chart actually, and the live trades as well if we get the time. And what else? Yes, we have a higher time frame discussion to do on the chart of gold. So here is the chart of gold, and time or price of discussion from the last webinar was, here's the last webinar's video back again. The price was 2540 something. Let's check the live chart now. So there it is, the low 2540, and this was the, what happened to my account? Okay, hidden. So this was the analysis that from 15th, there it is. This was the analysis at this point in time. This was the point in time in our last webinar point in time. So, and the discussion was that at least one leg up is remaining, and then it can either go down. Alternatively, it can just go up, shoot up. So that it followed the second idea, but nevertheless, as I just mentioned, both analyses were pointing towards this leg at least. This small move was confirmed from both analysis, and obviously we were able to capture all this part of this big move, and I'm actually holding long, so we'll see all those trades. But before we do any of that, I just want to discuss the higher time frame count. Here is the high time frame count. Keep in mind, I'm discussing two charts. This is the daily chart, and this is the 15 minutes. So we'll shift those time frames, and you need to be mindful. If it's a little bit confusing, you can let me know, or just watch the recording by going back in time on this video for better understanding. So this is the high time frame count we are following so far. We want to focus from this point of reference. Price level is 1817. So from here on, we can see very clearly we have an impulse in play. You already know the 5 waves of an impulse, and you can already see that the third is already complete. I am not very convinced with the fourth. This is a fact we discussed. As a matter of fact, previously we were expecting this down move. This was the first support level. This was the second support level. And something about the way this wave 4 is completed is a little bit sharper than I expected. Of course, the up move again is itself sharp. So maybe we are seeing extremely strong buying. That can be one case, and I cannot relegate that. But more interestingly, I think the possibility of wave 4 continuing is still in play, even though it does not look very likely, even though I am currently long. But keep in mind, I am long with the trailing stop loss. It's a free trade. Our trailing stop loss is much above our entry. We'll look into all that, but let's first discuss what other plays can be seen here. So if this is the three complete, then I believe it is possible that this market just goes inside a box range here, propagates, maybe even break the box range at once, propagate, and then give a down leg and then take off. That is definitely possible, and I just wanted to make you guys aware. Don't go ultra bullish on higher time frame because of this possibility on higher time frame. Now coming back to our discussion and lower time frame analysis, there's a question from what can this wave 4 become a flat pattern? Well, at this point, it can become literally any pattern, and because it can become any pattern, I haven't discussed really in much detail various projections because everything is possible. So yes, to your answer, yes, that's the possibility. Getting back to our shorter time frame analysis, what I have taken over here is one of the many possibilities I have taken over here. Keep in mind the possibility you see on this chart is from this point of reference, this 2790 level. So I'm on the daily right now, and on the daily you can see 2790 is the last high. So we take this as our point of reference. We shift it on the 15-minute chart, and here is what we get on the 15-minute chart. 2790 as our point of reference. Look at this. And from here we discuss the counts. The one I have taken right now is considering this as a, I believe that is the count, yes. Considering this as a WXY, keep in mind that's just one possibility. There are other multiple ways to count this. I've just taken the one which suits my own separate private discretionary analysis, etc. So, anyways, don't want to get too much into the detail of that. Now, the thing is, this leg is itself quite strong. So, even if it's going to form a sideways pattern by going into this box range, there's a very heavy chance it will probably test the upside of this box range, right? So, if it will do that, it is most meaningful to analyze this distinctively, and now we will focus on this. So basically we'll shift our point of reference from 2790 to this wave y low, which is around 2537 roughly speaking. So if we want to do that, we can simply just zoom into this chart and disregard whatever was on the left hand side for once. And it is following the arrows precisely here. And now we want to see what's happening here, right? So I'm assuming a bullish possibility at once. We are assuming that is the one that is. Let me check one thing for very quick take. 3, 4, 5. We are in the fifth. I'm assuming. Okay, so I'm assuming here that's just one of the possibilities of the multiple possibilities that are possible. That we are currently within the wave. Actually, I'm not very happy with this outlook on the count. It does seem to fit the picture for now. We are basically assuming that this wave 3 is continuing. I will probably have to update the internals of this. They have seemingly changed a lot, although they are still holding up by from a guideline perspective. I'll just change them later on. So we are assuming that the wave 3 is still continuing. You can take one way, roughly speaking. I haven't checked this. So You will have to confirm it at your end. Roughly speaking, it is possible that we are possibly in some sort of 3 within this 3 circle degree. Let's call this the circle degree. And if that is the case, we were expecting a wave 4, and that we were able to spot even before it dived right through or gave a deep leg down at this point. And my stop was at 2682. I think it will make more sense if we discuss the actual trade here before proceeding further with the analysis. So here we are on gold chart. And in minor longs, I just want to check earlier trade as well. Yes, book profit on all longs. That's the one. Added scalp longs. Yes, that's one. So on 28th November, we have taken some scalp longs on this chart. 2638 was the entry. I think I was able to capture more than 10 points here. So let's check 2638 and book profit on longs at 2649. So yes, almost 11 points. And after that, we were able to forecast this movement and added minor longs here. Yes, this is the second entry. This is the one we currently are holding. Let me remove this. So this is the second entry at 2659. And let's see, stop loss at 2653, and then trail moved to 2682. So we are roughly 22 points, 23 points above our entry. So it's a free trade. And so far, so good. Nothing else to add here. So these were the two trades, two major trades we pulled on gold within this week. I think there may be more near the start of the week. I don't exactly know. But anyways, that's all I wanted to discuss here. Not much point going back in time. Those who are in the group already know what we did or did not do. So anyways, this wave 4 is possibly still progressing. Keep in mind, this is not a confirmed count. I am not very pleased with it. As a matter of fact, my initial count suggests that we have, I think, wave 1 here, 2 here, and this is the 3, and this is the 4, and this is the fourth of a lower degree. Let's call dot 1, dot 3, and that's a dot 1, dot 2, something like that. So anyways, but whatever the case is, either this count or the earlier count, in both cases or both instances, we have a wave 4 in play. Wave 4 in play means that we are going to take out this last high, which is a high of 2709. How much higher will it go? We don't really care at this point. We are already in profits. We can just trail it to let the market figure it out for us. We'll of course discuss some targets, but these are the two main hypotheses I'm running. Right, if it gets confusing, just go back in time, watch this part again. Right, now, interestingly, we already are at a resistance 2710, and the next one is very clear. Let's look at that. Here's the resistance zone between 2723 and upside is 2750. Let's say. So between this level, which is come on, let's see where it is. Yes, 13 points minimum from the last recent high. We are expecting at least 13 or more points movement if this analysis plays out. Now, what is the analysis? As I just mentioned, in an impulse, we are currently in the third wave, and the third wave at least one leg up remaining. So if this analysis is correct, then after the third wave, there will be another correction, and then it will be followed by another leg up. This will be the fifth wave. So long story short, we have at least one leg up remaining. If the whole analysis is correct as an impulse is playing out, then we have two upside or up legs remaining. And in either of the scenario, the minimum expectation conclusion is that it should take out 2709, immediate resistance at 2723. That is in conclusion our analysis. Keep in mind, guys, higher time frame analysis on the daily chart, which we discussed at the beginning of this gold analysis, is important. Do not forget it. Do not forget the forest for the trees, or whatever the saying is. Right, but you get the point. Don't be very short-sighted. That's it for gold. Unless you guys have any doubts or questions in the live chat, just push them in before we head over to our next chart of S&P's 500. So far we have euro and gold trades which were discussed in the last webinars and which have played out. Let's see S&P's 500 now. Here it is, discussion from our last webinar on the chart of S&P's 500. Let's see what all was said and what was the trading idea or outlook. So yes, that is one of the main themes. 1, 2, 3, 4, 5 for one correction, two can go further lower, and this is the levels. 5817 was the expected level, followed by 5700 before the market takes off. And there was a second possibility, I think, which was suggesting that 2 is already complete. Let me see. Yes. So you are expecting at least 5817, if not further lower. I'm just checking if we have something else we discussed here. Looks like we have a rough idea. Let's go to the live chart instead of getting bored with the useless things. Just one thing I'll check is time frame 4 hour. So let's push it to 4 hour for the sake of convenience. And let's mark the time 15th of November. Somewhere here we were, and let's mark the levels. So I'm just quickly going back and forth between the recording and the live chart. 58175700. Now everything is in sync. 5817. So somewhere here was our expected support. 5817. Of course, the second one is much lower. Somewhere, roughly speaking, of course. Now, what has happened is so far this market has seemingly done continuation or what? Yes, so I'm assuming continuation. So let's check the count here. So this is going to be a complex count. In case you are not able to follow, you will have to rewatch the thing, or just let me know in the live chat if you are live here. I don't mind re-explaining if it gets out of hand. So what we are looking at from this point of reference, last high at 6034, we are looking at a possibility of WXY in play. Again, this can be taken as a different count, but my short-term analysis is suggesting that it is better I take it as a WXY. Now, if we do go with this analogy of a complex count, WXY is what we can call a complex count, then either this thing is complete, quite like our last chart discussion where we had predicted the wave Y and the reversal in gold. If you recall our last discussion and probably early discussions. So suggesting straight up is possible. Second suggestion is second X is remaining, and then there's the leg down. Keep in mind WXY can continue as a WXYXZ. So basically complex remains complex and becomes a triple zigzag in Elliott Wave terminologies. So those of you not getting it, this is what I'm referring to. This is, let's say, W, this is X, and this is Y. So what basically I'm saying is that we can have another X here, and that can lead the market to a leg lower than this. So the downside possibility is still not relegated. Keep in mind both our downside targets are still not hit, although the first one we reached quite near to it. It was not touched, or even the market did not really go with the enough stopping power there. There's a lot of buy orders already sitting there. So anyways, the idea remains that this market is unclear. The possibility of down move exists. The possibility of up move exists. It's a kind of a 50-50 kind of play here on this counter. And that basically means any position taken here should not be very huge. Reason is very simple. If the position is a very huge and a 50-50 kind of market, that increases the chances of a bigger risk. We want to wait for some more clarification. Let's see if there are certain excuse me. Let's see if there are certain data points which will help us determine what do you call decision in this market. Let me just squeeze this chart. Fourth and the fifth and the first and the second. No, that is not touched. So the bearish count definitely cannot be relegated here at all. What else? So I don't see much of a very strong setup here unless we see a sharp leg down, then below 58.81. We can look for sell opportunities. That is one setup I already have in mind. With this alert, I will be aware that this market is playing that, and will be interested in scalp shorts and scalp shorts only because this leg down can be short lived, by the way. That is something you need to be mindful of. So do not play this short unless you know how to play it. These sharp moves can look something like this, but with a much bigger tail as well. So anyways, you know what I mean if you know. What else? Yes, so the short setup is the only one we have, 5881. And of course, we will come up with some minor long setups in the short term because I am also counting it on a lower time frame. And we actually were able to see this C, but I did not take the trade. Very small move here from what is this? 68 to 75, rather small for my Friday trade. Right. Anyways, so short-term longs are possible and even the short-term shorts are possible. 50-50. Just wait and watch. Market and Gaurav Sony pushed the question here. What's about previous resistance? Previous resistance. There is no 1H, 2H or anything, Gaurav. I'm just changing time frames based on how I please. I don't look at time frames for resistances, but yes, we'll look at previous resistance by squeezing the chart anyways. I mean, is there any point to it? There is not. We are very near to our lifetime highs, so there's not much point. And the last resistance is literally near the high. So 6,000 is a psychological level. I wouldn't say much, but yes, there is not much point in looking at resistances from what do you call price action perspective. I will have to come up with detailed Elliott Wave counts on the short term for that. And review on gold and not chart resistance. Okay, the question is regarding gold. Okay. We did discuss the gold resistances, Gaurav. I recall this zone is what we are taking as the resistance. Just go back in time and you will find a detailed outlook. I've just pointed it out in case you don't want to look at. You can just navigate it on your own chart. I hope this clarifies your doubt. Okay, so moving on, let's head over to our next chart of Nifty's 50. S&P, we are wait and watch here. So I am now loading up the last webinar's discussion on Nifty, and here is the whole main theme which we had on this chart of Nifty in our last discussion. We were basically expecting the market to have at least one more lower move, downward move, and keep in mind, guys, we were also able to predict this leg to the downside as well, right? So see what the price on this chart is. In our last webinar, which was on the 15th of this month, the price was at 23559. And let's go back to the actual chart. 23559. That means the market was somewhere over here when we did our last webinar, and the idea was that one more down leg is remaining, which the market did give very clearly and cleanly, right? Now, what is happening right now is what we want to discuss. So let's just squeeze the chart a little bit. One that should be fine. So now this is the important trend line which I want to point out here. The market is taking resistance currently over here, and we have multiple assumptions or multiple counts as always, but the main theme remains. This is A, B, C corrective structure. That is basically something like this is probably happening. And in which case, I'm not saying this is the exact count. As I just mentioned, the counts are less relevant at this point. What is more relevant is how this market behaves at this trend line. So now the idea becomes that for a bullish sustenance, we want the market to take support on this trend line. And once the market takes support, we can then look for takeoff and trades above this pivot high or whatever you will call last high, recent high or something. You get the point. So, anyways, the point remains this trend line is important. We want to observe it. There is no trade for now. Bullish bias becomes viable if the market sustains above the trend line. If it does not sustain above the trend line, then bullish bias does not become very viable, right? Of course, there are other political factors, etc., in play, and don't want to discuss that because our conclusion always remains the same that there are at any given point in time monetary policies, political factors, in national, international issues that a country or a instrument might be getting affected by, and company internal meetings and internal policies also might have an effect. But the sum total of all of that should be reflected on the price itself, and hence we analyze just the price because price is the supreme king. So, anyways, long story short, we wait for this long setup to play, or if it does not, then it gives us a sign of possibility of bearish movement, right? So wait for the market to sustain above 23,900 and possible support on the trend line. No real trade setup for now, but for those of you who are following me since the last webinars, our Nifty setup for last webinar, which was look out for short, has played out. So in total, giving us 3 trades which worked out from our previous discussions. I won't take any further time here because we are kind of unclear on Nifty. It's a wait and watch market. I just want to touch up very quickly on BTC. I think we discussed it in the last webinar. I'm not so sure. So let's check. Yes, BTC was discussed. So let's very quickly check what was being said and have a very, very small or quick update on this market because it has become very clear after a very long time. So here's the chart from our last discussion, which was done on 15th. We were expecting that this market will go higher. Yes, we were. Where's that? So we were expecting that this market will go higher. This is the 3, 4, and 5th, and the upside target is very high because we are taking the target from this simple, very simplistic analysis that a trend line resistance is taken as a target 123,000. So 123 with 3 zeros, a very symmetrical kind of number. What am I even talking about? So, anyways, so that was the take in the last webinar. The price was 89,836, I think. Yes. Let's see the live chart. Now the price is 99,097, very close to adding one more zero to it. So the targets, although were very high, do seem quite relevant. And with that being said, the trendline resistance is showing 125,952. So let's call 126 is the new immediate target as per our simplistic trendline analysis. Anyways, more important is the Elliott Wave count here, which is kind of giving us a rather clear impulsive view. If you ask me, I mean, this is a very clear impulse for a very simple reason that in an impulse, you want to see the wave 3 as the strongest, and within the wave 3, the 3 of the 3 as the strongest of them all. So here we are within this double bracket 3, within this double bracket 3, we are within the 3, and this is looking extremely strong, at least for now. Of course, situations can change, but looking at this bar, I'm assuming that we are valid enough, or we have a valid assumption to assume that we may see a follow through, right? So those of you holding longs, I believe would already be long based on breakout trades. We had a resistance breakout around 74,000, and then the next level was 83. Taken both of them out without any issue. Look at this. Didn't even come back properly to retest or anything, just a minor spike here. If I zoom in, just a minor spike here that tested this level. So that's a very strong from this market. And then the second resistance level was taken without even a retest. That basically means that a continuation may be in play. We are all about assuming possibilities in analysis and taking trades or risks based on those possibilities. That what analysis is, right? So based on these uncertain I would not say uncertain. Based on these hypotheses and analytical methods, it looks like we can assume that impulse is in play, and if everything works out picture perfectly, we have 1, 2, 3, 4, 5 legs incoming. So even if we are wrong, at least one leg should come into play. I mean, if five is possible, then why not even one at least? So that's our take on BTC. Longs remain very viable. Market outlook remains strong. And invalidation of all this short-term count, not actually short-term, the daily count will be if we see move below 86,754. That will be a sign that something else is going on, perhaps, and we need to update the count or book the losses depending on where you entered the position. I'm not long on BTC, by the way. I'm not trading it. Right. So that was it for our analysis. Those of you who enjoyed it and stayed till the end, thank you very much. And of course, do not forget to hit the like button and more importantly, share the content. Thanks to your guys' efforts, we have so far been able to touch 1,000 levels multiple times within the past few weeks. And the last video remained a little bit shy and could not cross the 1,000 level or touch it. But I hope that those of you guys who are putting in your efforts and sharing the content will continue to do so, and we will continue to see 1,000 plus views and hopefully more in the coming days, and remain connected with the more willing or deserving audience who likes and appreciates our content. So with that being said, I'll say we have discussed all the things we want to discuss. And again, those of you who are interested in our private Slack group can check the details in the bottom. Those interested in learning about Elliott Wave can check the video course. Again, link in the description. And thank you guys, those who stayed till the end. I'll see you guys in the next one. Luis is saying thanks. Very welcome, Luis. And wonderful analysis. Thank you from Raghu. I'll thank you, Raghu, for staying till the end and your nice comment. So that's it for this webinar, guys. I'll see you in the next one. Take care.